Hello, today is Sunday, April the 5th, and as always, or maybe not as always, as most of the time we're taking a look at the markets, trying to make sense of what's happening and maybe what could happen during the next week. And with that being said, let's start. Let's cut to the chase. But actually today I wanted to start with something different. I wanted to start with a bit of geopolitical analytics, if you wish. So this was the tweet that has been published by Donald Trump in his social media about half an hour ago, and as you can see here. Like the most likely scenario, I'm just trying to say it diplomatically. It's the next week will be about escalation, not about the peace negotiations. Most likely, I'm not a political analyst and not a diplomat by all means, but I think that this kind of language is probably not the best and not the most conducive in a situation like this when you're dealing with an adversary that has religion, actually a mix of religious and political and financial incentives for as their core motivation. And this actually makes political structures very resilient, this religious component, because, for example, when you have a pure financial and political, that means power, incentives in place, like it was in Venezuela, it makes politicians relatively agreeable. Like after certain measures, they become really agreeable, and that was exactly the thing that has happened there. But when you have religion in place, it makes people very, very different. And actually using aggressive language, in my opinion, will most likely lead to the exact opposite of the desired outcome here. And the strait most likely is not going to be opened without further escalation into a ground war. So that could be the main takeaway from this tweet here. So let me switch to charts again. And obviously, as always, we will start with Bitcoin here. And Bitcoin is the market that's trading 24/7. One of the most sensitive markets to everything that's happening in the political domain and in macro domain. And that's why, and it also trades 24/7, as I've said, and it's gapless. So that makes it one of the best markets to actually trade, because here, let's go back to that tweet for a moment. Here you are protected from gaps. So that's the big thing about Bitcoin. Its mix of sensitivity and volatility as a result, and it's gapless at the same time. It doesn't have these technical breaks that regular futures have, and it's volatile, so it's good for trading. Anyway, as you can see, like, let me open the hourly. This was the hour when when the aforementioned tweet was published. As you can see here, that the reaction here is definitely negative, and it's following through and it's not holding through at the moment, but it won't bounce, at least at the moment, at least in the first 13 minutes of the next hour. So nobody seems to be eager to step in and support this market immediately. And that rhymes well with my perception of this tweet, these news about the escalation during the next week, that the market will take it seriously. So that was like, I was looking at Bitcoin, and we will return to Bitcoin a bit later, because actually today it's better to start with two other indicators. And the first one obviously is the price of oil. You can see that we had a breakout on Friday, and it's near local highs, and actually not so far from all-time highs of 2022. So in my opinion, these highs most likely will be tested during the next week, when we and if we will see the aforementioned destruction of civilian infrastructure. That's what it is, in Iran. And maybe we could also see some hints at ground invasion during the next week as well. So that could easily drive oil prices higher to these previous highs. Sorry for convoluted and repetitive phrasing here. And the second important indicator here is actually 10-year yield, and it's not trading now. The market is closed. But when long US treasuries produce these increasing yields, that usually means stronger concerns about long-term stability of the economy. And I think that's the last indicator that has not confirmed longer-term implications of this war so far. So this is important thing to watch during the next week. Will it break out or not? I think quite likely it will, and it will start to price in maybe more problems in the economy for longer, if should it happen. With that being said, let's go to indices, and here we can see that let's take a look at NQ or QQQ, like Nasdaq. Here we could see actually the development that wasn't so bad for the market, because it had this sort of undercut here below these psychological levels of November 25. It went back up, and it actually posted higher low on Thursday, April the 1st, and it's quite bullish for the indices. And this consolidation from August to September 25 was certainly in play there as well. So this support is very valid, and we will be watching the next week, because it could pose something different here before it transforms itself into a full-fledged bear market. Maybe it could spend some time here wearing people out, and maybe like on Wednesday, when we will hear FOMC minutes, Jerome Powell could upset market a bit more. And I'm like almost 100% sure that he will be extremely cautious. Like he had his moments with the street, and nowadays he is way better at communication, but at the same time, it's quite difficult to say anything reassuring in regards to the rate while this oil situation is like this. Obviously, nobody knows how long will it take to fix this situation, and how much resources will it take, and which political outcomes will it bring to the states first and foremost, and to the world at large. So this scenario, until Iran capitulates, is a primary scenario for me here. So that's the thing I'm expecting. And if you take a look at volatility, nothing really has happened here. It is still in this rounding formation. Like you can see it on the weekly, you can see it on the daily, and maybe, just maybe on Monday, it will spike back up, or today in the evening, because today is Sunday. I won't talk about things I don't know. Will it be open today? Not quite sure. I don't know when volatility starts trading, but something like that in the reverse is quite likely here. And that maybe could lead us to these peaks, and that's the time when the market will finally price in this new fear, new uncertainty, and maybe that's the time when the market will start looking for new themes. And there are new themes there. For example, I won't be covering that today, but for example, this supposed SpaceX IPO could be very, very powerful for the space stocks sector. And actually, it's already there. Like these stocks are waking up, so that's what's happening there. But before that, we should discount all the geopolitics. As you can see with that tweet being posted, these tensions are far from being resolved at the moment. So the outlook for the next week in regards to stocks and markets, like legacy markets, I don't know, like the traditional markets of the States, is I would say like negative to neutral negative. But I think if I say that it's negative, I'll be quite honest here. Let's talk about some stocks too, and I'm quite bearish about NVDA right now, because if the market is about to correct, and if for some reason, not for some reason, like if we will start seeing weakness in labor market, more pronounced weakness, because right now, like secondary metrics are there, we could start pricing in new theme. And this is like the, I know some people would call it like the popping of the AI bubble, but I wouldn't call it like a bubble right away, because it's not a bubble. It's extremely useful technology, and it's here to stay, and it will change the economy drastically. But at the same time, I think we're due to some repricing here, and that repricing could include new factors. And the fact here is that the consumer, most likely, in my assessment of this trend, consumer economy won't benefit much from AI. In fact, it will suffer, because what's happening right now is AI is replacing the core consumer group in the States, like blue-collar workers, like office workers, writers, software developers. And these people, those people and companies who adopt AI, they now can create output of like few times, like 10x more than they were able to output before the emergence of AI. And these people, they could transform themselves into entrepreneurs, and I think it's the golden time, actually, the golden time of the small business, of like aligned small teams, politically and socially aligned small teams of software developers, of content creators, of designers, maybe what else? Any kind of knowledge workers could thrive in this economy, should macro cooperate, of course. But it's not going to be like this immediate switch. It's going to be quite painful in the beginning, and we need to reprice that with AI stocks first and foremost. And before these new businesses will come to fruition, there could be suppression of consumer behavior in the States and in other developed countries that are experimenting with AIs these days, like not experimenting, like actively implementing them, these tools in the economy. It's important to note that I don't think that there is an immediate danger, so to speak, of humanoid robots like Tesla Optimus right now, because it will be much cheaper to hire a human for menial labor than it would be to employ a robot, actually. And that's sort of a bit far-fetched, like to wait for their immediate arrival and disruption of I don't know, like manual labor. So that is actually short, and President Trump is helping right now. So the economy, the market reaction, like we're not speaking about economy at the moment, the market quite likely will react negatively. So this short could be working quite well during the next week. At least that's my expectation. If not, like, risk management is always with us. What else? With that being said, I think it's good to switch to. Oh no, it's not. It's not. Let's take a look at these insurance companies, and I think these are very vulnerable right now, because they have lots of these private credit securities in their balance sheets. And this private credit situation, it has been mentioned in the news, but it was mostly overlooked because it's boring. It's not that exciting, quote unquote, as the war news, but it's still out there. And the Federal Reserve actually can't help much, because it can't like lower the rate, and it should be very careful with its monetary measures these days. So private credit is in a bad shape, and it's securitized, and it's distributed through markets, through the economy, and it's there in these insurance companies. As you can see, they have corrected quite a bit, but I think it could be they could see a bit of a further correction should the market cooperate here. And if the market obviously starts to price in further negative developments related to higher oil prices as a result of this escalation that's supposed to take place during the next week. With that being said, let's finally switch to crypto, and here we can see that USDT dominance is looking bullish again. And it's funny because when the best chart in the market. Actually, this is the best looking chart at the moment. If it was a stock, I would be like watching it like 24/7 with alerts set, and maybe even some orders typed into the platform. So, but it's actually quite bearish, because this chart shows how money flows to the safety of stablecoins, and among stablecoins, Tether is a leader. And what we see here is this long consolidation that started at June 22, and now it's flagging near all-time highs. And if this thing breaks out, that would mean a full-fledged bear market everywhere, not only in Bitcoin and Ethereum, but in legacy finance as well. Because it's a hedge. It's important to note that it's not only a hedge from protection from volatility in price, negative volatility when the prices fall, but it's also a hedge against traditional, quote-unquote, banking, infrastructure, and finance at large. So if the markets are correcting and the demand for stablecoins is expanding, that could potentially hint at problems larger than just like ordinary correction related to some situational problems about the war that went south, like a quick victorious war that maybe is not so quick and even not so victorious after all. But we'll see that. Victory is a very political term here. So obviously military dominance could translate, isn't necessarily going to translate itself into political victory at home. So that's an important thing to keep in mind here. So this is the best chart. As you can see, at this exact moment, the price is quite weak in Bitcoin, Ethereum, BNB. That one is actually, I think, is ready to break down here. What makes it a bit better, BNB, what makes it potentially a bit better as a short, is that the line here is horizontal, while in Bitcoin and Ethereum it's tilted to the upside. That makes it a bit less reliable. So BNB is obviously in a weaker position here, and I think it's a two-edged sword situation, because BNB was actively promoted as an institutional grade token, and organizations and even governments around the world hold it, and they are under pressure right now, and they could be tempted to sell, to liquidate their positions. And that is exactly the same thing that was helping the token during its dramatic rise in the second half of the previous year. Now it's exactly the thing that's putting it in menace. So that's why it's a bit weaker than the rest of the space. Institutions aren't very comfortable right now. With that being said, it's fair to also note that this move is quite correlated. There are no outliers with the exception of meme coins, and that tells you something. Like, everything is feeling weak right now, so the market takes the tweet and this whole war situation and oil situation and rate situation, and maybe even these secondary factors, because they're obviously secondary right now, despite their structural meaning. I mean, the AI work, job market, and consumer behavior suppression, and also this private credit situation. They are secondary in perception, in markets perception, but they are out there, and they could be priced in, or maybe they're pricing in during these events too. everything is quite correlated, as you can see. And we could see failures of this flag in Tao, in BitTensor, distributed AI system. We could also see failure of this flag in Hyperliquid, the AI the on-chain exchange the software, the next or maybe another strong theme in the market of decentralized finance. What else? Important mentions: Aztec, privacy theme, weak, correcting, breaking down actually at the moment. Where is Night Protocol? There it is. Like week 2, breaking down. So as you can see, like the relevance of a specific theme, like of something innovative that could drive the next cycle, is dropping now. So that means structural weakness in the market. And if you couple that with the USDT dominance, you could just assume with the high probability that we are about to see correction, and it could be quite powerful during the next week. I think that's it for now. Take care. Bye.